I'm Victor Stagnero, and you're watching Taking Stock.
The buyers back in control here on Wall Street in no uncertain terms after a day of profit taking here yesterday. The buyers are back at it with technology stocks easily doing the heavy lifting here, just moments away from the ringing of the one, the only iconic closing bell here on the trading floor of the New York Stock Exchange. And the crowd goes wild. We didn't even rehearse that before we did it. They were just waiting to go. Tech doing the heavy lifting here on the day. We'll talk much more about technology shares on this Thursday, October 23rd. Today is the New York Stock Exchange's International Day. Members of the NYSE international community set to do the honors. It all sets the stage for a jam-packed half hour here on the show. And welcome to the show, one and all. You're watching Taking Stock. I'm your host, JD Durkin. Moments away from the ringing of the close, the great Jay Woods of Freedom Capital Markets and CNBC. He's on deck. He'll be joining us after the close to get his perspective on general price action on the day. The leading sectors out of the S&P 500 today includes a big bid for energy shares. We'll talk about that more on the show. Industrials, materials, and of course tech, with staples and telecom leading losses to the downside. S&P 500 expected to finish up 0.6%. And with that, the crowd goes wild again. The NYSE International Day community here now to do the honors. And with that, the tail of the tape is one in positive territory. Stocks finishing just off session highs. Looks like the S&P 500 will miss an all-time high record close by only 5 points or so. Dow Jones Industrial Average up 0.3. The NYSE Composite Index up 0.5%. How about the small caps on the day, folks? You love to see the Russell in on the party, up 1.2%. Let's bring in the man himself, my man, Jay Woods of Freedom Cap and a CNBC contributor. Thanks for being here to kick off the broadcast.
Good
as
to be
always.
here. Did we get those highs? I didn't see.
We are off by about 5 points from another all-time high
tallying
close.
votes. It's still not officially closed.
Well, to the point about the votes, what's interesting is we heard from the White House today to say the president is expected to meet with Xi Jinping for the first time next week since 2019.
Yep.
What are you seeing on the backdrop of these markets that continue to push higher?
What caused the most volatility this October were the banter going back between the two leaders. So now that we have certainty that they'll meet, there's hope that this will calm things down and maybe hammer out some sort of deal and we can climb higher from there. The market climbed this wall of uncertainty, and then when more uncertainty came in the form of tweets between the two gentlemen, we sold off, we got a little volatile, and now what are we doing? We're within a stone's throw of all-time new highs. Broadening rally, you mentioned the small caps, we can't forget those. So things are looking good, it's crazy.
Yeah, absolutely. I want to get your take on earnings season so far. The big banks, at least, had one kind of tail that they had, and then we had some other kind of news with regards to regionals. We're starting now to get into the part of the calendar for the mega caps.
Yeah.
What's on your radar for earnings palooza, Jay Woods?
Oh, earnings palooza. Well, first the financials. They did kick us off. The six biggest banks all beat on both the top and bottom line. Price action didn't get us to new highs in all of them, but guess what? They're still right there, right in line. I think they're poised to lead us higher. The regional banks, some credit woes, a few smoke flares went up there, warning signs, cockroaches, as Jamie Dimon liked to call them. It was not widespread. It's something we're going to keep an eye on, but the earnings were strong, some M&A activity there. Regionals, big part of the small cap. Another reason we're rallying here, looking good. So the financials, the baseline, that was solid to start. We had a few concerns. Netflix did not really wow the street. A lot of competition there. Technically, we're at an important threshold here with that 200-day moving average. So Netflix is going to stall, but Tesla, good price action, nice reversal today. Solid earnings for the most part. Well, we'll watch Musk on November 6th and see if that pay package goes through for him. And then we got a lot of big earnings on tap next week with 5 magnificent names reporting.
Wow.
That will be the springboard to new highs, or we pull back here and we talk double top. I don't think we'll be talking double
Yeah,
top.
those are the sorts of weeks you and I are very grateful to have lots of coffee and caffeine here at the NYSE. We have got like that many earnings.
Yeah.
I want to ask you about gold and the precious metal conversation. Gold right now, last I saw before the close, still off its recent all-time high by about 5 to 6%, but up 10% month to date. What are you seeing in gold price action?
Well, it's a little parabolic. There was a little too much euphoria in the gold trade, and then when we had some panic, people rushed in. So it was acting as that safe haven because the Dow sold off 2%, the S&P sold off 2%. But gold has been perplexing to those of us that follow the economy and say it's a safe haven. When the market goes down, gold goes up. Yet gold's making all-time highs and up 55% year to date. I still think it's going to retest that 4,000 level. If you had some profits and you're a short-term trader, you probably want to take them. Long-term, I think it's going to digest these gains and continue its uptrend. But right now, gold has had a nice run. I see it rotating into other asset classes. Look at healthcare. Not much staples, but materials starting to catch a bid.
Oh, yeah.
We'll see these rates come in, what it does for the home builders, and then technology continues to be the play and the place you want to be over the long term.
Those that make and those that take, old school Dow theory over 100 years. I know technical analysts like yourself, you're paying close attention to what's happening right now between industrials as well as the transports. What are you seeing in that space?
Yeah, the transports have yet to play catch up, and for those old school people, and now the market has changed, where the trains aren't driving the economy, but those things that take UPS earnings next Tuesday. Watch that. Worst performing stock in the transport. Did it finally turn around? We'll find out. But we would like to see the transports get back to all-time highs to confirm the Dow for those Dow theorists. I don't give as much credence as I did when I started in this business 30 years ago. We'll mumble through that one. But yes, we would like to see a broadening of the participation. The transport's above the 200-day moving average. Starting to see some rotation in there. Let's see if all the transports left. JB Hunt gave us a good start, but then the United didn't. So it's still a mishmash of activity within the transports. Not the best sector, but one to watch for a little bit of a reversion to the mean. I think materials is the one, biotech is the other that are starting to turn up, and you want to really keep an eye on.
Yeah, we didn't get to talk about Giants Eagles, so we do have the Eagles helmet from the great Jim Cramer back behind us. We got Birds and Giants coming up on Sunday. My man, we have to leave it there.
Yeah, a little revenge game.
Yeah,
we were kind of asleep at the wheel.
I don't know about that. Josh, will take your microphone. The great Jay
wait,
Woods,
but how did you do last week? All right, we won't talk about it.
I know. Yeah, we skip over the losses, Jay. Todd, you and I are going to take a walk. We'll talk about a very closely watched Polymarket contract. To the point about football, since tonight we got Thursday Night Football, and Jay Woods and I were just talking about it. We're going to go ahead and take a look at the Polymarket event contract space. I'm not pushing through that crowd right now. What are you kidding me? With my back face to them. Up on Polymarket right now, participants are wondering who's going to win the Super Bowl on February 8th. 15% chance it is the Kansas City Chiefs, a 12% chance it is Buffalo, 11% chance for the Detroit Lions. Excuse me one, I'm going to squeeze right through. How about a 9% chance only for Jay Woods' favorite Philadelphia Eagles, the Birds, to set as repeat champions. More than $430 million total value on that volume contract. The New York Football Giants, by the way, 1% odds to win the Super Bowl. So you're telling me there's a chance. Todd will take a look at one NYSE notable company. How about the strongest performer in the S&P 500 today? The team from Las Vegas Sands with a huge beat on revenue for third quarter. Strong demand out of Macau as well as Singapore with regards to the company's revenue. Analysts from Mizuho boosting their price target on the stock from 56 up to 63. Las Vegas Sands up 11% year to date. And remember, folks, we will be there next week. We'll be taking stock live on the road from Las Vegas, Nevada, Monday, Tuesday, and Wednesday for Money 2020. You do not want to miss that. Todd, let's finish quickly with a look at shares of technology companies up 1.2% on the day. Why is it up? Because NVIDIA, Microsoft, Apple, Broadcom, Palantir, Oracle, they're all the most weighted names in the tech ETF. They all had positive sessions here on Wall Street, traded near the top of its 52-week range. Shares of XLK are up 23% since the start of this year. FinTech TV's very own Ornella Hernandez caught up with Snap Ocean Data Solutions founders Tim Eng and Marco Venaccia at Hub 71 Impact in the great city of Abu Dhabi. Take a look.
We're here with Timothy and Marco from Snap, one of the latest cohorts of Hub 71, and they're trying to preserve the world's oceans. So guys, tell me a little bit more about what's going on here today, what you're looking forward to, how it's going so far.
So what we have here is a robotic fish that collects data of coastal ecosystems. These are difficult to access regions, and we collect this data to protect nature from pollution.
Can you add anything about what you expect from this event today?
We're expecting to meet with founders and meet with potential partners. We want to take this company global and help as many coastal communities and help biodiversity all around the world.
Okay, so you've already been operating for a while in Hong Kong. You're new here to Abu Dhabi ADGM. So tell me why you came to the UAE.
So a year ago, I think with COP28, I came to Dubai and I saw the government pledged we're going to protect nature. And 2 years later, I actually see the results of it. And then I realized that this is a place that cares about nature and the environment. And we realized that's where we want to be.
Tell me how it works specifically, like the process of what you guys are trying to do, the impact that you're trying to have.
So this is one detail is that this is the world's fastest robofish. We've won the Guinness World Record 3 times. We've beaten it. But what we're trying to do is use high tech for real world impact. So again, help communities, help biodiversity all over the world to surveil and monitor seagrass ecosystem, mangrove ecosystems, seashells, oyster beds, to help communities increase their livelihoods.
So you gather intel, you research, you monitor, and then what do you do exactly with all this research?
So I think the most important question is, how do we know what the state of the ocean currently is? And for most of these ecosystems, when it passes a critical threshold, there's no turning back. So we're using this data to create models so that we can ensure, one, we're on the right track, and two, if we're not on the right track, we talk to the people, the conservationists, the governments, we convince them with solid data so that we can take actions, because these problems are solvable. The only problem is we can't solve what we can't see, and we're bringing the data to your home screens.
All right. And so what does impacts mean to you personally as individuals, as well as part of Snap? Like what kind of impact are you guys trying to have?
I think for me, it's quite straightforward. When I studied engineering, it's to solve an environmental challenge. We have climate crisis and we have nature crisis. And to me, impact means stopping this so that future generations can enjoy the nature that I grew up with.
Okay. So what about you, Marco?
Very similar. I believe climate crisis is the defining challenge of our time. And this is my dream, is to have my little drop in the big ocean of change and have as much impact as I can in the global communities.
All right. Well, one last question, little silly question. What do you guys prefer? Coffee, karak, or matcha? How do you caffeinate yourselves?
I was once a coffee person until I had karak. Karak is amazing, and the way it's prepared, it's beautiful.
My answer would be out of the box, dark chocolate, because it actually has more caffeine than coffee. So dark chocolate it is for me.
Love that. All right. Well, thank you guys today and enjoy the rest of the event.
Let's do it, folks. Welcome back to the broadcast. You're watching Taking Stock live from the trading floor of the iconic New York Stock Exchange. Time now for the latest headlines you need to know in the world of fintech, crypto, and AI. First up, all of the major cryptos all up multiple percent today. Next up, President Donald Trump has pardoned Binance founder CZ, ending his conviction for money laundering violations and signaling a new era for the crypto giant's return to the U.S. markets. That's a huge story on the day. And finally at this hour, prediction platform Polymarkets reportedly seeking new investment at a valuation as high as $15 billion. This, of course, just coming a few weeks after the NYSE parent company ICE invested $2 billion into the company. Joining me now here on the trading floor at the New York Stock Exchange is Mike Packer. Mike is partner and head of Latin America at QED Investors. My man, welcome to the exchange. Welcome to the show.
Thanks for having me, JD.
Talk to us first and foremost about what is top line priority for you at the team at QED and really a lot of your top initiatives.
Yeah, these days we're kind of looking for fintech winners across the globe. We think that fintech as a category is still in super early innings. We put a paper together earlier this year with BCG that kind of said fintech penetration is only 3% of all financial services. That's 3% of $13 trillion. And so we feel like we're in very, very early innings of finding the next fintech companies. Lots of interesting trends these days in the crypto world, stable coins, been following a lot of cross-border payment companies. And one of the things I know you want to talk about today, banking charters in the U.S. We've been following this theme a bunch, and we think it might be a good push for more innovation here in the United States.
For sure, I'll ask you about that in just a second. First and foremost, how do you separate the winners in the fintech space from maybe the not winners? What do you look for in terms of a company composition in the crowded space?
Well, so we're early stage investors. We've been doing this for 17, 18 years. We've done 250 investments over that time period and have found fortunate to find 31 unicorns. Some of those we're still hoping to get our money back.
Wow.
But that track record has been a combination of connecting dots across the globe, so what works in one geography might work in another, and then also really trying to understand fundamentally where markets will go. So trying to figure out a company's unit economics early, even if they're starting in a position where they're maybe not making money, but being able to make money and really provide a resiliency in a business model from day one. So we do a lot of focusing on those two things, where we can connect dots and kind of unit economics, strong returns in any market.
How are you connecting those dots in terms of the broader state of where fintech is and really the growth areas that QED is most focused on?
Well, so fintech stocks this year are up 50+% as a basket, even though the last month or so hasn't been so good. So we think we're seeing a bit of a re-emergence of value in the growth of fintech companies. So again, we're really, especially there's a whole trend you guys probably talk about a lot here in artificial intelligence and AI. It's really helped accelerate the growth early of companies. So we're looking for companies that start to grow early, can keep growing early, and use some of that momentum to win their markets.
Yeah, of course, Mike. It's 2025. I'm not doing my
Yes.
job as a financial journalist if I
Well,
don't
I
mention AI.
didn't watch all your
no,
shows.
No, but I'm not. If I don't mention AI at least once an hour around these parts, I feel like I'm not doing my job. Yes, you report on bank charters. You alluded to it earlier. What are you seeing that you think is most important for our viewers to also understand and take away from your report?
Sure. So this year, we've seen a resurgence of applications for bank charters. So 20 this year in the U.S. Across all types of bank charters. And that's after many, many years of pretty much none happening. And that resurgence, I think, is a combination of three things. Fintech companies are getting big enough where they can actually handle the cost and scrutiny that comes with a bank charter. Number two, we have a bit of a favorable regulatory environment right now where companies are able to kind of get some assurance that they're going to at least be looked at if they file an application. So that's been really good. And the third thing is the banking as a service sector has been a little unstable, and I think the industry really wants to take control of its own destiny. So you're seeing these big fintech platforms start to see that they can be regulated, they can be fully compliant, and they can really push innovation from the inside.
That's
so we're really
awesome.
excited about that.
Yeah, that's awesome. Really grateful for you and the team for taking the time to be down here on the show
Absolutely.
today. Mike Packer, partner and head of Latin Americas at QED. Come back anytime. It's nice to have you here.
Judy.
Folks, don't go anywhere. Much more Taking Stock coming up live from the trading floor of the NYSE, including the latest in the world of startups, raises, and rounds, plus an interview you simply do not want to miss with Jonathan Evans of Lithium Americas. Stay tuned. Welcome back to Taking Stock. Today in the latest worlds you need to know, and startups, raises, and rounds. First up, payments giant Modern Treasury acquiring stablecoin startup Beam in a $40 million all-stock deal. Next up, battery recycling leader Redwood Materials now raising $350 million. It's got the backing from NVIDIA's venture arm in order to scale its new energy storage business. And finally, the news you need to know, Gaggle founders Anthony Goldblum and Ben Hamner launching Sumble. It's an AI sales intelligence platform with $38.5 million in funding. The New York Stock Exchange's very own Ashley Mastronardi sat down with Lithium America's CEO Jonathan Evans for a one-on-one interview to discuss why lithium has become such a critical resource for the global economy. Take a look.
Lithium Americas is a Nevada-based lithium company focused on lithium extraction. Their flagship project, Thacker Pass, in the same state, will be completed in 2027. I'm joined now by Jonathan Evans. He's the president and CEO of Lithium Americas. Thank you so much for joining us.
Thanks a lot. I really appreciate having me here.
So why lithium?
To see how important it is, how much it's grown over the last 10 years. I mean, this is an industry that's growing at 15% annual growth rates, and it's ubiquitous. Everyone thinks about mobility applications, electric vehicles, but we're sitting in this building here. This interview is powered by lithium batteries. Every universal power supply for a data center has a lithium battery in it. Missiles on ships, drones and on war fields. It's everywhere, and it continues to grow as we're a very power-hungry society. Even for the grid itself, a large-scale grid storage to stabilize our grids, and even connect it to renewable energy to store either the sun or the wind and use it at different times. So it's super important. It's a critical mineral. It's been on the U.S. Government and actually the European government, Canadian government, Australian government, Japanese government. It's been recognized as something very important, and now in the world we're in, very strategic as well.
Thacker Pass started in 2007. Can you take me through that project, the evolution of it, and what is going on at Thacker Pass?
Yes, it's been a long journey. It was started under a different company. In fact, the deposit, which is the largest known lithium deposit in the world, was actually discovered by Chevron looking for uranium. They didn't find a lot of uranium, but they found a lot of lithium. But back in the early 70s, that wasn't very important. In 2007, a company started to advance it. We took the asset over in 2016, did a lot more work on the geology, found that it was very unique, very, very cost effective, very, very environmentally friendly as well, and have worked now to basically build the whole team out, finance the project fully. We're fully financed, and start construction about a year and a half ago. We are in full construction deployed at this point. We've got about 500 crafts on site. Excavation has been done. We're pouring concrete, all aimed at opening this facility up in late 2027. It'll be the largest integrated lithium operation in North America, and it'll supply a portion of what the U.S. needs, not nearly enough, but the largest domestic supply of fully processed lithium that we'll have as Americans.
So the project has stimulated the economy in Northern Nevada.
Yes, it will. It already has in terms of the influx of workers coming in. But once we get up and running, if you look at what the benefit is from a tax standpoint, both federal tax, state, county taxes, I mean, you're talking hundreds of millions of dollars.
And you're looking at 2027?
To start the plant up. We'll ramp up over the course of 2028. And by the end of 2028, we'll be running it at full rates.
And where do you see lithium extraction going in the next 5 to 10 years?
There's a lot of looking around now in the U.S., just given the run-up we had in rare earths, we had in lithium, and both are quite volatile because they're relatively small compared to something like copper or iron ore, which they're too small to be exchange traded. So Nevada, we have the largest known sedimentary-based asset. There's a lot of work going on in the regions of Arkansas and Texas for lithium development, Canada for hard rock. Traditionally, outside of China, it's been Australia. Australia essentially ships everything, the raw material that they have, it's not processed, to China. And in South America, Chile and Argentina. So it's fairly limited, but you're seeing now every region of the world looking for this material. I think the Ukraine just is offering a tender now for a lithium deposit because Europe needs a close inshore source of it, because right now they import theirs either from, usually in China, already embedded into batteries or cathodes, or coming from as far away as places like Chile.
All right, Jonathan Evans, President and CEO of Lithium Americas. Thank you so much for joining us.
It's a pleasure. Thank you.
Welcome back. I'm Scarlett Sieber with Money 2020, and we're going to be talking about how fintech or other companies actually make money in today's segment. So let's get some facts on predictions. Predictions is the focus for today. That's right. Welcome to FinTech in 2025. The sentences make less sense every single day. In case you've been living in an igloo, we should mention that ICE, the owner of the New York Stock Exchange, is either preparing to invest or has already invested $2 billion into Polymarket, the world's largest predictions market platform. Quick reset on prediction markets. What are they? A prediction market is a marketplace where participants buy and sell contracts tied to the outcome of a future event. Elections, economic data releases, even pop culture, sports. But how do Polymarket and prediction market makers move in general? How do these people make money? These platforms aren't just novelty bets. They are cash cows, and revenue flows in multitude of directions. Don't blink because the money keeps flowing. Transaction trading fees. Every trade carries a small fee or commission. Large volume leads to meaningful revenue. Listing event creation fees. When someone wants to create a new contract, will GDP growth exceed X? The platform may charge a fee to list or to host that. Data licensing and subscriptions. This is likely ICE's big goal. Real-time probability curves, sentiment metrics, aggregated forecasting data. Sell that to hedge funds, investment banks, corporates, media, you name it. Spreads and liquidity provider incentives. To keep the market active, platforms often incentivize liquidity providers, capturing small spreads between buy-sell prices. Token economics and blockchain revenue. In crypto-native markets, these might issue native tokens, collect fees on those tokens, or charge for staking or governance access. We've got more. Enterprise API premium access, premium data APIs, bespoke enterprise integrations, white label prediction market services, all potential revenue lines. Lastly, why is Polymarket especially interesting now, you may wonder? Let's think about this. As usual in fintech, an unsexy reason, Polymarket received FTC approval via its acquisition of QSEX, a U.S. regulated derivatives exchange and clearinghouse. Welcome to the party, Polymarket. Keep your eyes peeled on a market made around my occasional co-host going gray. We may have an internal bet on when it's going to happen, but we have tools now, people. We will dig deep on this subject, so send questions, guest recommendations, tell us what we're missing that you would love to see. We'll take the risks, dig into the good, the bad, the ugly, and the exciting. Back over to you on the floor.
Intel shares up 5% after the bell. It sets the stage for tomorrow's must-watch CPI inflation print. At long last, we'll get it for investors across the major market indexes. NYSE TV Live, FinTech TV Live, 9 a.m. tomorrow. That's going to do it for Taking Stock, and we will see you tomorrow.